Hello and welcome to Car Dealer Live. I'm James Baggott. I'm the founder of Car Dealer magazine. And today I'm delighted to be chatting to Nathan Coe. He's the Chief Executive Officer of Auto Trader. Nathan, how are you?
Very well, thank you, James.
Good. Lovely to see you. Thank you for joining us and giving up your time for this State of the Nation piece. Let's start with, what are you seeing in the market out there at the moment? I mean, you must speak to a lot of dealers on a daily basis. What are they telling you?
Yeah, well, we speak to a lot of retailers, and we also have the benefit of having loads of car buyers and those retailers on our platform as well. I mean, at the moment, what we're seeing is that demand is holding up very, very well, which some people might be surprised at. We have seen consumer confidence dented. You know, many of us are paying a lot higher interest rates on mortgages, and the cost of everything has gone up, and that's affected dealers as well as individual consumers. But actually, we've got just over 14% more people on Auto Trader in August than what we had last August, and that was already busy. So demand feels really good, and dealers are selling cars slightly quicker than they were last year and slightly quicker than they were in July. So that feels like it's holding up well, but we might come on to it later. What we are seeing is that supply is starting to come back in an uneven way in terms of the amount of vehicles. So older vehicles, we had a lot of new cars that weren't built. So actually there's strong demand out in that part of the market against very constrained supply that's not about to change anytime soon. And then actually we're seeing quite a bit of supply come back in younger vehicles as new cars production comes back. And that is causing, a much softer price performance than what we're seeing certainly in the older vehicles. But it's all underpinned by pretty strong demand across the board.
I've been talking to a lot of dealers over the last couple of days as we've been asking their opinions on things like the 2030 ban, which we'll come on to shortly. But they're telling me it's a real mixed picture out there. Some are saying that they're doing well, others are saying it's really, really quiet. And I just wonder whether it's something to do with this current economic backdrop. It looks a little bit uncertain, doesn't it? Do you think dealers and the market should be worried in any way?
Well, I mean, as I said, I'm not sure that dealers should always worry. That's a healthy thing to do when you're trading day to day. I think they really need to be paying attention to the data, because you are right. On Auto Trader, whenever I speak about our customers, I'm kind of speaking for them on average. But, you know, just as there's lots of people to the right that, you know, doing a lot better than average, there are a lot of people that are doing a lot worse than average. And that's why a lot of the data that we provide focuses on that dealer's local area. We're using regionalized artificial intelligence-based algorithms to kind of map that supply and demand, because it can play out indifferently. But I'd say overall, you know, those people that have been specializing in younger vehicles, you know, car supermarkets being an example, but lots of smaller independents falling into it. Some of those are still having quite a tough time. If they can get the car, they tend to be trading in older cars than what they're used to. That means it requires more prep. You know, I've heard examples of very good retailers that are saying it's taking 3 hours to do a car, not an hour and a half. Sometimes you're waiting on parts, so actually you can't even sell the car. So whilst that part of the market's healthy, even it has its challenges. And if anyone had electric vehicles, you know, certainly the early part of this year, the late part of last year, you know, we saw the average used electric vehicle price go from 50,000 to 40,000 pounds, literally in a matter of 4 or 5 months. Now, if you were sitting on that stock, or if you had a lot of that stock, you know, you will have taken a hit on that. So I think it is possible to do well, because the market is good and the supply dynamics are something that people can pay attention to. But if you don't pay attention to them, you could get caught out. Whereas back in COVID days, it was almost like everyone was making loads of money. You know, if you had cars, you'd sell them, you make a profit. We're starting to head back to, you know, those more normal trading conditions where, you know, you've got to be smart about what you're buying and what prices you're paying for it.
If you listen to any of the comments on our YouTube videos, whenever we do these sorts of chats with used car specialists such as yourself, a lot of people are predicting a crash in prices. They're linking the economy and the rising interest rates and people's mortgages going up with a real impact on car demand, and they think that's going to impact dealers. I don't actually believe that's 100% to be true. What are your thoughts on it?
Yeah, I kind of agree with you, but I'd provide a caveat. So I think, you know, in used vehicles, mostly ICE vehicles, as it turns out, those older vehicles are going to hold up pretty fine, because you have just got a lot less supply than a more normal market, and we've still got more demand than a more normal market. So I think if you kind of look at, any car that's over 3 years old, I'm certainly not predicting, or we're certainly not, that we make it great. We don't normally predict prices. We just kind of share our observations, but we're not expecting to see that dynamic really shift around and change dramatically. Where I think, certainly retailers that I've spoken to, and where I think actually supply could cause a little bit of trouble is in this, if new car supply kind of comes back a bit quicker than people expect, or manufacturers are under pressure to hit their targets and start to look at some of the other distress channels, then I do think you could see those, that pressure on new car flow down into the pressure on younger vehicles, because supply of those younger vehicles, I think under 3 years, is up 14%. So it's, those cars are definitely there. And if the new car market starts to bite into that, and you start to see a lot more supply or pricing pressure on the new cars, then I do think you could see some wobbles. So I think watching, that the younger vehicles, particularly the electric vehicles, on a literally day-by-day basis, that is one area where you could see, some wobbles to the downside. But the rest of the market, the vast majority of the market, is still looking pretty good. And I think you're right, all those things are affecting consumers, but the reality is, for most consumers, when we speak to them, 85% on Auto Trader are saying they still feel good about the affordability of their next car. And most of them need it to ship the family around, get kids to the school, or actually for their work. So we don't typically see consumers treating cars as though they're a discretionary purchase.
Do you think they're swallowing those interest rate rises? Talking to one dealer this morning, they said they're having difficult conversations with people who are coming back in. Sometimes they're in an electric car, they're in negative equity, or in an awkward position. And then when they're saying, right, the next car is going to cost you £100, £200 more a month, a lot of these customers are put off by that. But do you think you're seeing some consumers are actually swallowing that and just accepting it as a natural rise in the cost of living?
Well, I mean, personally, any of us that have got a mortgage, it seems hard to just understand how someone might be able to swallow those kind of increases, right? And I think you are seeing that, and you are seeing that play out through consumer confidence. I think when it comes to cars, and this is a little bit anecdotal, I suspect what people are doing is they're coming in with their budget, they're coming in with the need to buy a car, and what's actually happening, and this might be fine because they've not been in market for 3 or 4 years, is, ordinarily they might have been buying a 5-year-old car. Now they're probably buying an 8-year-old car with that same budget, because of the, it's not only all those pressures that you've spoken about, but, you've covered a lot on your show that used car prices have gone up much, much quicker than inflation. So I suspect, and this is one reason why we're pretty confident in those older vehicles holding up well, because you're going to have a lot of people that can't afford a new electric vehicle, or can't even afford necessarily a younger vehicle. So they're going to need to shift themselves down the age profile. So I imagine it is more that people are just managing and accepting what they can get with their budget. And that's better than it used to be, say, 10 or 15 years ago, because the reliability of vehicles is, much, much better. Scrappage rates are much, much lower, but and they might be completely unaware that, had they made that decision 3 years ago, they would have been looking at a car that was 3 years younger.
Yeah, absolutely. We've had slightly out of left field, out of nowhere, the government this week changed the date of the 2030 ban to 2035. It was leaked to the BBC yesterday, as it was today, and that was confirmed by the Prime Minister. Did that shock you? And what are your initial reactions to it?
Well, I'll be careful in terms of saying I'd be shocked when politicians change their position on what you would have thought were pretty landmark policies. I think it's disappointing. I think the problem with something like that is I don't think it takes account of the manufacturers. It feels as though it's a consumer-driven thing, or it's definitely something that's trying to endear the public to the current political party, more than it is taking account for the pressure that they put on the industry by putting those targets in the first place. So moving the ban back only makes a transition that is definitely going to happen slower. And for most manufacturers, they're already so far down the planning route. They did have the prospect of fines, and actually they've still got the prospect of fines on vehicles. that you can't just shift the whole production facility and model range. You can't unmake decisions to take, Ford Fiesta out of the market. These things have all happened. So it's just too late. And I think what would have helped actually, so it makes no difference probably, nor not a great deal of difference whether that's moved back 5 years or not. I think what would have made a difference is actually if the government put more support behind the target that they'd already put in place. And that was always the criticism, that they put in place those targets, but unlike Norway, there was no real incentives to help subsidize the cost of those vehicles for a consumer, or subsidize the cost and support the investment from a manufacturer perspective. And now we're in a position where we still don't have that. And that's the thing that we need, whether it's 2030 or 2035. But I'm speaking a bit on behalf of manufacturers.
Yeah, it's been I don't think any of us really saw it coming, but it seems to have landed with the industry with a mixed reaction. I think I'll put it that way gently.
Yeah.
What would you say about any other broader trends in the industry at the moment? Is there anything else that's affecting car dealers that should be on their horizon and they should be preparing for?
Well, there's a lot out there, as you know, running your site. You've had more news than you can publish at times. So I think the biggest thing in terms of trading, I think, is really paying attention to those younger vehicles as that new car supply comes back. If that's the area in which retailers are specializing, it does feel as though that's the place where, even though demand is good, supply is already higher than demand there. So if you get even more supply, then prices will correct quite quickly. As I said, the older vehicles, that feels completely fine. So using data, making sure you're paying attention, not even just to the buckets of vehicles in terms of their age, but we're seeing, say in EVs, for example, overall EV market health, which is our measure of the balance between supply and demand, it's negative 40%, which sounds quite grim, but there are certain vehicles within that, like the ID4, like the Leaf, which are actually positive 40% and will make for great trading. So interestingly, it's not broad trends. It's actually about getting underneath the broad trends to make sure that you can trade well. Then I think the other big news, anyone with a franchise is watching carefully the move to agency. I know you've talked a lot about that on your shows and on the site. And I think a lot of franchise retailers are really starting to think through, well, what might this mean for me? And, if that does become, if I make less profit out of those new cars than I used to, then how am I going to make that up? And that tends to be what retailers are very good at doing. They've had all sorts of things thrown at them over the years, and they, somehow magically, not magically at all, through a lot of hard work, managed to find a way of making it up. But there's no question that the agency change in franchise is one of those big ones that's going along with, the transition to EVs, which is really what that younger vehicle pot is all about.
Yeah, absolutely. And you mentioned earlier in our chat there about AI and how you use it in your business. I mean, perhaps we could just expand on that a little bit. And are you seeing any good examples of dealers using it? And how should they try and integrate this into their business in the future?
Yeah, no, it's definitely a topic of the times, isn't it? Now, the good news is we've been using AI for about 10 years. We just haven't been kind of had the T-shirt printed to say we use AI. But what we're really doing, and the answer to your question as to how dealers can integrate into their processes, because a used car is a unique item, you kind of have to use artificial intelligence in order to be able to put a value on it, in order to be able to put a flag on it, in order to be able to compare it to other cars and understand supply and demand. So pretty much most of the metrics that our retailers can find in portal or that they access through our APIs are all driven by, a very large, very sophisticated data science team that are using machine learning techniques so that we're not kind of guessing as to what might happen to used car prices. We're just observing it based on, huge amounts of data and compute. And dealers can take advantage of all of that. When they look at a retail value on Auto Trader, that retail value is generated by artificial intelligence based on a lot of training data. I mean, we have a lot more data to train our models on than anyone else and than any dealer possibly could. And that's all available to them as part of their Auto Trader contract. And that's whether it's, whether it's the retail price that drives the price flag, which I know, is still an emotive topic for many of our customers, or whether it's about supply, demand, the performance of your ads on Auto Trader, how you might improve it. because all these things are unique vehicles, rather than using rough averages, we use those highly predictive AI models to do it. And we're essentially looking to democratize that and make that available to any retailer, so they don't need to go out and work out what a data scientist is and invest a load of money in building their own artificial intelligence models, because it's not cheap business.
Looking towards the future then, and looking into next year, what are your predictions for the market and used cars in particular?
So I think there's two things. We are seeing transaction volumes. I mean, we've had a market where transaction volumes have been low, but dealers have been, doing just fine, because actually if transaction volumes are down 5 or 10%, but your gross margin's up 20, 30, 40, 50%, then you're absolutely happy, because you're doing less work and making more profit. I think as we move into next year, perhaps unfortunately, we are going to move back to a world that some of us may have forgotten, which is where you used to have to work really, really hard. Retailers are always working hard for profits, but actually it's going to get back to, you will have strong demand. We continue to think that will be the case, but you are going to have supply starting to eat back in. You won't be in as undersupplied a market, and that is going to put pressure on margins, because margins are still, generally speaking, running at levels that are well ahead of anything any retailer would expect in a more normal market. So I think it should still be good, but it's not going to be as good as it was, and it probably wasn't as good last year as it was in the year before. So I think we're heading back towards normal, and the more that we head back towards normal, I think it becomes, there are going to be possibly some bad habits that have creeped in and some good habits that have creeped out. And I think, retailers would do well, I think, and certainly the best retailers that I see are making sure that they're retraining those muscles in their dealerships as quickly as they can, because you might just not make as big an opportunity of the next year as you might be able to. But overall, it's looking, it is looking pretty good. There's enough demand to sustain more supply, but if we see sharp movements in supply, then that can hit certain makes, models, or age cohorts pretty dramatically. So it is about data, and making sure that those kind of processes are embedded in your business and applied, not just to, that site, but applied to that vehicle. And that's certainly what the best retailers we see are. The very best of them will get the stock list out, and they'll be making phone calls to general managers on a daily basis about that, that particular car that's been in stock for 70, 80, 90 days.
Sage advice, Nathan. Thank you very much for giving up your time today to chat to us. It's been really good to speak to you.
Pleasure. Always good to speak to you, James.
Super. Thank you very much. That's Nathan Coe, CEO of Auto Trader. Right, for more videos like this or more used car news, log on to cardealermagazine.co.uk. I'll see you next time. Thanks for joining me. Goodbye.